We're joined by Ron Williams, who's technical strategist at MIG Bank. Great to have you with us. So you've brought us some charts. The first one is the US dollar against the Japanese yen, verging on a 40-year cycle reversal is the title. Just take us through this.
Well, this is set to be one of the biggest trades in 2012 to look forward to. And this is basically a very long-term chart of the dollar-yen, which will symbolize broad Japanese yen weakness. But by doing that, a big change in mass psychology and the way that the yen is actually used in terms of capital flows for safe haven investment, but also in terms of the popular carry trade, where people have been using the Japanese yen as a funding currency to invest in high-yield assets.
All right, let's go to the next one. Post-intervention retracement. This is also the yen.
Well, this is a very important concept in that throughout history, throughout the last 10 years of history, specifically on Japanese yen, whenever there is intervention, the reaction in the market tends to be quite short-term. So there tends to be a price retracement back into the intervention levels. And so we've had 3 interventions this year, and each time we've had a retracement back to the previous low in this chart.
So you've actually pointed out there on the chart the times in which we've had a move from a central bank.
Exactly. So on the chart there we have the G7 move just after the earthquake,
right,
early this year. Then we have which is a multilateral move. Then we had 2 BAJ moves thereafter. Each time the market had a sharp reaction, of course, to the massive trillion-dollar investment into the market. But then the market then reverted back to new lows. The key point here is that any major reversal in dollar yen is likely to be a 2-stage setup. So we might see new record post-World War II levels first.
Well, that green arrow on the end, that is quite a steep incline, and we know what that means for Japanese companies, exporters in particular. Not good things.
Not good things, but it'll be a short-term potential new record low on dollar yen, so further Japanese yen strength over the next few weeks and months. But that will set up an optimum environment for that major cycle reversal, where we'll see a massive change in
40-year cycle reversal with the massive psychological changes. All right, okay. Let's talk about gold, because it's broken its 200-day moving average. Check out this chart. Take us through it.
Well, this is something that we spoke about in the last program. We spoke about how important the long-term 200-day moving average was, and of course all the major institutions across the world, traders and investors, have been watching this line in the sand. We just recently broke it for the first time in 3 years, and that is a very important psychological event, which will likely...
Once you break it, it can fall further, but it's actually increasing after breaking that average.
Absolutely. I mean, in the first 2 weeks of December, some of my timing models were suggesting a further decline in the markets, and that happened across all the risk markets, including some of the safe haven plays like gold. But now this is just a momentary bounce just before the end of the year end, which is expected. I still believe that if we hold below that moving average, there'll be a much larger decline into the 1,300 and maybe risk scenario for $1,000 over the next few months into mid-2012. The key thing to keep in mind is that will set up a very long-term buying opportunity for gold in the second half of next year.
Right. Let's look at the next chart about the US dollar, favoring a recovery of up to 30%.
Well, a lot of this news is positive for US dollar, and it's creating a domino effect, flight to safety back into US dollar, especially when you have traditional assets such as gold, traditional safe haven assets such as gold deleveraging lower, right, Japanese yen potentially having a major reversal, Swiss franc already reversed quite sharply, about 34% against the US dollar. So this is all increasing flows back into US dollar. We're likely to see that potential recovery on course for 30% over the next few months.
Ron Williams, our technical analysis strategist at MIG Bank. Thanks for visiting us today from Switzerland.